let's connect. Let's take that story forward. Binu is ready, and he represents Elara Capital, head of research with Elara Capital. Binu, good morning. Thank you for joining us. Is the wonder drug effect of Revlimid now for Dr. Reddy waning away? Because markets, in a sense, were excited when they got the approval. Now markets are disappointed that the impact now seems to be getting diluted.
Yeah, good morning. So generic Revlimid opportunity was a real once in a lifetime sort of opportunity that the Indian pharma companies got, not just Dr. Reddy's, be it Natco, even Cipla, Zydus Life, and Sun Pharma have benefited quite a bit around this drug. It is a multi-year settlement with hundreds of millions of revenues, almost 90% possible margins. This is a once in a lifetime sort of opportunity, and it will be difficult for any company to replicate that or to completely compensate for that when the sun sets for this opportunity in FY27. So I do expect some decline in profits for most of these companies in FY27, given that the generic Revlimid goes away. But I believe that is well known to the market and fundamentally priced into the valuations of the stocks. So to that extent, I do not worry on that from a stock price perspective.
So that's the Revlimid part. Then let's look at the other two aspects. One is the CDMO business and then the oral generic business. How do you see trends shaping up for the CDMO business, which seems to be the hot topic, and oral generic, which now seems to be on a back burner?
CDMO companies have had a pretty lackluster year so far. We have not seen growth, significant growth in any of the CDMO companies this year. But of course, there is a lot of promise holding up over the next 2-3 years because there are large products coming into the manufacturing contracts for many of these companies. There is China plus one story out there where large MNC pharma companies are looking to diversify their supply chain. There is potential tailwinds from a Biosecure Act in the US. So all these hold significant promise for the CDMO industry. But at the same time, one has to be mindful of the fact that a lot of this is already priced into the stock price in terms of expectations. So whether the story plays out better than what is already priced in is a key question that we will need to figure out over the next couple of years. Coming to your second question about generics. The global generics business is a slow-growing business, but it is here to stay. There is a continued need for generic drugs globally, be it US, Europe, emerging markets. That is a market which will grow. It may not grow leaps and bounds, but will continue to grow in mid to high single digits, and along with some market share gains for Indian players. Indian companies can continue to grow double-digit in the generics business. The valuations are not exorbitant in that space, so I would continue to look favorably at the generic space.
Okay. Where do you think a franchise like Dr. Reddy should trade 1 year and 2 year forward? I mean, what is a deserving PE for a company? You know, with IT, we know it. 8% growth, buybacks every 2-3 years, it should trade between 15 to 18 times. But you know, with pharma, it's cyclicality. What may work for you in this quarter may not work for you next quarter. You know, one drug comes in, it changes the fortune. You miss on one drug and price collapses, the prices drop. What do you think is a deserving P multiple for a company like Dr. Reddy, where there is a little bit of cyclicality, there is an advantage of research, but there is a lot of global problem when it comes to the generic part?
Sure. So as a fundamental analyst, I do not worry so much about a product coming and going in a quarter or a year for that matter. If you normalize these things, some big product coming in, some big product going out, etc. If you normalize these things on a steady state, these companies such as Dr. Reddy's, Zydus, Cipla, Sun, etc., can sustain a low double-digit EPS growth over the medium term is my estimate. So when you say low double-digit, 11, 12, 13%. For companies which are offering 12 to 13% earnings growth on a sustainable basis, and given the cash flow profile of these companies, these could trade anywhere between 25 to 35 times 1 year forward, depending on the market in current market valuations.
All right, Bino, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us on the earnings of Dr. Reddy's and what to make out for the whole pharma pack as well. Thank you so much.